How does laissez-faire economics work? Have you ever wondered how an economy can thrive with minimal government involvement? Let's break down the concept of laissez-faire economics and see how it operates. Laissez-faire economics is an economic theory that promotes minimal government intervention in the market. The term itself means let do, suggesting that economic activities should be left to the free market. This approach is rooted in the belief that individuals and businesses can allocate resources more effectively than any central authority could. In a laissez-faire economy, the market operates freely based on supply and demand. Prices are set by the interactions of buyers and sellers, without any government influence. The role of the government is limited to protecting property rights, enforcing contracts, and maintaining civil order. This means that the government does not regulate businesses or interfere in economic activities. One of the key principles of laissez-faire economics is the idea of free trade and competition. Businesses are allowed to compete freely, and trade is unrestricted. This competition encourages innovation and efficiency, as companies strive to meet consumer needs. The market is said to self-regulate through consumer choice. If a company fails to satisfy its customers or behaves unethically, it risks losing business to its competitors. Another important aspect is private property rights. Individuals have full control over their property and can use it as they see fit, as long as they respect the rights of others. This ownership encourages people to invest in their property and businesses, driving economic growth. Laissez-faire economies often experience high levels of innovation and entrepreneurship. Without regulatory barriers, new businesses can emerge and thrive. Consumers benefit from a wide range of products and services, which drives competition and leads to improvements in quality. Companies are motivated to be efficient to remain competitive, which can result in lower prices and better services for everyone. However, there are challenges associated with this approach. Critics point out that laissez-faire economies can lead to market failures, such as monopolies and negative externalities. These issues can arise when companies exploit resources or harm the environment without any oversight. Additionally, some argue that laissez-faire systems can increase wealth inequality, as those with existing wealth may have more opportunities to accumulate even more. From a Republican perspective, laissez-faire economics aligns with the belief in limited government intervention and the promotion of free markets. Many Republicans argue that reducing government regulation can stimulate economic growth and innovation. This allows individuals and businesses to flourish without unnecessary bureaucratic hurdles. However, some Republicans also recognize the need for certain regulations to protect consumers and the environment, balancing the principles of laissez-faire with practical considerations. So, how does laissez-faire economics work? It relies on free markets, minimal government involvement, and the belief that competition drives efficiency and innovation. While it has its benefits, it also faces criticisms that highlight the need for some level of regulation to ensure fairness and sustainability in the economy.